Guys, to Trading Academy day 40. We are nearing the end of the academy, I think. I don't really got much more videos to put out. And this is going to be one of my favorite videos right here because we're going to go over the current strategy that I am using or mainly using nowadays. But yeah, if you guys enjoyed the video and the academy, man, leave me a like, comment, subscribe. It really helps out the channel grow. I'm trying to get to 10K subs before the summer starts. So if you guys can get me there, that would be fucking awesome. I'm drinking coffee. I'm kind of congested as well, but anyways, let's get into it. So candle range theory, you guys have probably heard this around like social media, probably specifically more Twitter. You guys have probably seen it on my TikTok, etc. It is a really good model. Credit to, I think, Romeo. He's the one who really popularized it. It has worked. So take it from me. I used to be a guy that would be like, I don't want to really learn new models and strategies. And that's fine. If you got your strategy locked in, just stick with it. Don't fix what's broken. Like the unicorn model, that's a very good model. That's a very beginner-friendly model. This is going to be way more advanced. Like I said, I have a whole playlist dedicated to the unicorn model if you guys want to go watch that. And the inverse fair value gap model is pretty straightforward as well, but this one's going to be a little more advanced. So yeah, let's get into it. So CRT, candle range theory. This is basically going to be, we're going to be using candles as ranges, okay? Basically, what we're going to do, and this is fractal, right? You can use this on any time frame, but we're pretty much going to be using candles as ranges, okay? Ideally, you want to get into the distribution candle, okay? So let's say this candle here is going to be our range, right? Now we wait for the next candle to open, and I'll explain how we use specific ranges or what candle to use as our range. I'll show you guys some examples as well, but this is just a rough draw real quick, okay? So let's say we're using this candle as our range, okay? We want to wait for the next candle to open, and if we're looking for shorts, right, if our draw on liquidity is going to be lower on the higher time frames, again, draw on liquidity is going to be very important. So if we're looking for shorts, right, if we're looking for shorts, we want the next candle here, if we're using this as our range, we want this candle to open high, okay? We don't want to short a candle that opens lower first. We want the candle to open high, sweeping this candle, right? The candle that we're using as our range, sweeping its candles high, okay? Now, let's say this is the 1 hour or 4 hour chart, because that's usually where it works best, okay? Again, you can use this on any time frame for scalps and stuff like that if you're using it on the lower time frames, but it's best, it works on like the higher time frames, like 1 hour, 4 hour, 6 hour, 12 hour, daily, weekly, etc. But let's just say it's 1 hour. We want to wait for this candle to open high if we're bearish. If we want to short, we want to wait for it to open high. Okay, so put that in your notes, right? Open high is what we want to look for if we want to go short. And then open low is what we want to look for if we want to go long, okay, if we're long bias. So imagine this candle, if it opened down here, if price action was down here, and we were looking to go long, we want this to open lower first, sweeping this low. And then we would look for potential longs in the lower time frames, okay? You never want to long a open high, and you never want to short a open low, okay? Keep that in mind, all right? You can replay that as much as you need to. So let's say this candle opens high on the 1 hour, right? This is the manipulation candle, okay? This is going to be the manipulation candle, and usually in the manipulation candle is going to be more advanced, but usually on the manipulation candle on the lower time frames, on the 15-minute, 5-minute, 1 minute, 15-second even, you will get an SMT divergence in this wick. Your job here is to enter on the wick, or try to enter on the wick on the manipulation candle. Again, this is going to be a more advanced tactic. Again, that's why I said you want to enter on the distribution candle if you're not super familiar with this strategy, but the manipulation candle is going to be your best entry in terms of risk to reward. So you want to enter on the SMT in the manipulation candle. If you are correct, this shouldn't get back above up to here. This candle in the distribution can tap the range high, which is called point of control, right? This is called your POC. Right, it's basically going to be your range high of this candle's range. It's high. That's going to be POC. It can come all the way up to here, and usually, if the turtle soup, right, this is what when we have a soup of liquidity, and you get into the top or the manipulation candle, it's going to be a turtle soup, right? Some of you guys may have heard of it. Some of you guys may have not heard of it, but this is pretty much a turtle soup entry. Okay, it's going to be your best risk to reward, etc. Anyways, when the distribution candle opens up, it can come up to OTE of this candle's range. Okay, so if you were to take a fib and you were to draw this out, it can get up to OTE of this range. You guys shouldn't be freaking out. It shouldn't get above this high if the SMT is valid and if this is actually your manipulation candle. It could definitely do something like this. So your best bet, in my opinion, is to get into the distribution candle if you're not familiar with this strategy. Okay, you can tap POC, and then the next couple candles should distribute lower, and this would be your target right here. Now, let's go over to the next example so I could explain this a little more better. Okay, so let's say this is your 4-hour range. Okay, you have a 4-hour candle and you're going to use it as your range. All right, so the next 1-hour candle or 15-minute candle opens, or the next 4-hour candle opens, right? So let's say this is the 6 a.m. candle on indices, right? One more thing I want to mention before we move forward. For Forex, it's going to be a little different. The 4-hour candles, if you're using them, it's going to be 1, 5, 9, right? These are the 4-hour candle openings. And for indices, it's a little different. For indices, this is going to be 2, 2, 10, 2, okay? Or actually, sorry. It's going to be 6, 10, 2. My bad. 6 a.m., 10 a.m., and then 2 p.m. Okay, these are when the 4-hour candle's opening. This is when the 4-hour candles open. These are the candles that I use mainly whenever I'm playing ranges or try to use. But again, you can use them on the 1-hour, 15-minute, etc. Okay, so let's say this is your 4-hour candle, and then we have another 4-hour candle open. Okay, so down here, this is going to be your opening price for the next 4-hour candle. Okay, so open. Remember when we talked about opening, guys? Open, close, open, high, low, close, and open, low, high, close. Go rewatch that video. It was one of the very first videos in this academy, okay? If you guys don't understand, this is very important for this strategy specifically. All right, so we have the opening of a new 4-hour candle, but we're using this one as our range, okay? So that's why I have this marked right here, right? Imagine if we had it marked here as on this candle here, okay? I'm just moving it to the right here. So this is the opening of the new 4-hour candle, okay? Opening price. Now we go lower, we sweep the low of this 4-hour candle that we are looking at for using our range, right? Okay, we sweep the low. So let's say that the other index makes a lower low and this one here makes a higher low. Okay, what do we have here? We have an SMT divergence, right? So we have an SMT divergence here. So this is where the manipulation happens, and this is where you would want to get in ideally if you know what you're doing. If not, you would wait for the next 1-hour candle opening, because if you were to split the 4-hour candle, right? Let's say this is the new one, right? In here, this price action, this black line, this is a new 4-hour candle. We open, we have an SMT. We could split this new 4-hour candle into 4 1-hour candles. You guys following me here? So you could split the 4-hour candle into 4 1-hour candles. So we have the opening price of the new 4-hour candle, which you can consider the opening price or accumulation, right? So we can accumulate here for the first 1 hour. Or here, let me change this. We can accumulate here for the first 1 hour of that new 4-hour candle, right? Now, let me switch this here. We can accumulate for the first 1 hour of that new 4-hour candle opening, right? We have an SMT. This is the manipulation candle. You would want to get in on the wick, okay? This is basically where you would get in on the wick right here on the SMT, right? You would want to long the stronger one that makes the higher low. And if you were to long the one that makes the lower low, you would basically get in on the breaker. Now, this is what makes a breaker high probability if you're using this strategy, right? You can confidently enter on the breaker because it's high probability if this is correct, right? Now, if you use that first hour of the new 4-hour candle opening, this is going to be accumulation, okay? Then the next 3 candles should be distribution, right? So this is your manipulation, accumulation, and then the next 3 candles in that 4-hour candle should be distribution to the upside of the 4-hour candle's range. So let's say you get into here in this SMT, this is going to be your low risk buy, okay? It's going to be your low risk buy, and you would aim for here. Okay, there's going to be your low risk buy right here. You get in anywhere around here, or you don't even have to get in right here. You can wait for a pullback into OTE of this range right here, right? And it usually does come back. If the turtle soup is valid, if the sweep of the lows are valid and the SMT is valid, a retracement to OTE shouldn't scare you. That should be confirmation of this to go higher, okay? Usually we do retrace to OTE. a lot of the times in these situations here, when we're using candles as ranges, we will retrace the OTE and we will go higher, okay? So the 50% of the candles range, or the range that you are using for whatever candle you're using, the 50% is going to be your take profit one, okay? So TP, partials, break even, right? TP, you could take profit here. You could partial, right? Meaning trim, or stops to break even, right? Stops to break even at the 50% of the candle's range, right? At the equilibrium of the candle's range. This is where discount is of this candle, right? Remember when we use discount and premium, right? That's basically the same shit. We're just using the candles as ranges, right? You're pretty much buying in a deep discount down here where the SMT is occurring. This is your low risk buy, and then you would TP once it hits equilibrium, which is going into premium, right? TP, you could set your stops to break even, etc. And usually, if we're right, we'll get another turtle soup here, and we'll have another SMT right around here in one of the correlated assets, and then we'll keep going higher, and we'll take out the 4-hour candles range high, or whatever range you are using, whatever candle you're using on whatever time frame, right? And then we'll, do whatever else after sweeping the high, and then we usually close off, and then, we'll have to reevaluate where our next range is going to be, right? After, usually for me, in my opinion, after we sweep the low and high of the range that we're using, I kind of just be done for the day, or I'll just wait until we make a new range, which is going to go, which brings me to my next thing, which is going to be like, okay, which candles do we use as a range? How do we identify which candle to use as a range, right? So I'm actually going to show you guys here which candles to use as a range. So if I start here on gold, right, just on the daily chart here, actually we'll just go weekly, right? So the candles that you want to use for as ranges, okay, is going to be any candle that closes the body above the previous candle. So here, this would have been our range, right? Because this candle closed a body way above this candle's high, right? We closed the body above it. And then this could have been our range, but this week closed a body above this candle's high, okay? So this becomes our new range right here, all right? Boom, this becomes our new range, okay? So what do we do when this candle closes inside this candle's range? All right, this candle right here is going to be called a parent candle, okay? Then if we have a candle close inside this candle's range and we don't sweep the high nor the low, this becomes our range that we are going to use for the short term, okay? This becomes our ICR, our important candle range, okay? So as you guys can see here, this candle here, we could use it for the short term, but we would still want to be paying attention to this one, right? Because sometimes price action doesn't need to sweep the parent candles low or high, but it usually will. Sometimes we don't, but it usually will. So we use this candle. If this candle closes inside this candle's range and we don't sweep the high or the low, this becomes our new candle in the short term, okay? But we'll still be paying attention to this one. We'll still be paying attention to the high and low. Now, if I start zooming into the daily, you guys can see here, it starts getting a little interesting, right? So like I said, we'll use this candle's low and we'll use this candle's high in the short term, because on the weekly, I just showed you guys, right? We close inside this candle's range because this candle closed the body above this candle's high. And then this candle didn't sweep the high or low, so we use this candle in the short term. So if I go to the daily, you guys can see here, Monday, Tuesday, Wednesday, Thursday, Friday, right? And this is the week that we're going to use. And then Monday, we come down, we sweep the low, right? Boom, we sweep the low, or actually we didn't. We swept it on Tuesday, okay? So Tuesday, we come all the way down, we reach for that other low on the weekly candles, right? So if I go to the weekly candle, we reach for the parent candle's low, okay? So if I go to the daily, we see a huge wick here, okay? Was there any entry around here? Let's go to the 4-hour, right? Okay. So now we can start fractalizing, meaning we can start zooming into the timeframes and using the 4-hour as ranges, right? So right here, this low right here, which is sell side, right? That's the apparent candle's low, okay? Now, this candle right here would be our range for the 4-hour at least, right? Why? Because we close the body above or below all these candles. So this becomes our new range until we see a body candle closure below this candle right here or above this candle. So this is going to be our range for the 4-hour, okay? As you guys can see here, this candle here closed within inside this range right here. So this becomes our ICR, our important candle range for the short term, and then this is our parent candle. Okay, so the next 4 hour right here at 2 in the morning, we come down, we sweep the low, but we never closed a body below it. Okay, so we sweep the ICR's low and the parent candle's low. So what's next? The high, right? This is going to be actually it's going to be the 50% of this candles and then the high. Okay, so if I mark this out here, we're going to mark this out here, guys. Let's see, template range, boom, right? Mark this out as our range. Now let's start zooming into the 1 hour. Okay, so let me actually go ahead and take this off real quick just so it doesn't get confusing. So that 4 hour candle is our range, and this 1 hour can be our range as well. It's the same thing, right? The 1 hour candle closed a body below all these candles, so we don't have any closure below any, or we don't have any body candle closures below this low right here, right? So we end up sweeping this low, right? So this is where you can get in right here. When we come up, we close, but we don't even have to use SMT. Remember how I said we have to use SMT? I'm looking at gold, right? You could use silver as the correlated asset to find SMT. I don't really trade gold as much, but CRT, the candle range theory, works really, really well on it. I'm going to show you guys some examples on indices as well, but as you guys can see here, this is our 4 hour candle range. We come down, we sweep it. Now our TP, if we were to get in this wick on the 4 hour or 1 hour wick, our TP or partial or break even spot would be at the 50% of this 4 hour candle. And then runners or whatever else you want to hold your position to would be up here. And as you guys can see, we end up hitting it right there. Okay. So if I go to the 15 minute, let's start zooming in even more. Let's go over here. All right. There's really nothing that I see right here besides this order block. Let's go to the 5 minute. Okay. Let's start zooming in. Let's see if we could find a breaker block or anything of that nature right here. Okay. We don't see anything here. Now let's go to the 1 minute real quick. Let's just see. Let's see if there's any breaker or anything like that around here. Okay. Let's go to the 1 minute, very low time frame. Where are we? I don't even know where we're at. Let's see. We're way over here. Okay. Wait, where are we? Let's see. Let me find my spot, boys. Hold on. Give me a second. All right. Let me bring it back on replay because I don't want to go all the way back. Let's go 1 minute. Okay. 1 minute time frame, right? We sweep that low here on the 4 hour or 1 hour, whatever range you're using. And as you guys can see here, this is fucking beautiful, right? We have that inverse fair value gap strategy, right? So if you're using the inverse fair value gap strategy, right, you guys could use that right here, right? You could use the inverse fair value gap. We can have breaker blocks, order blocks. It's going to be high probability if your candle range is correct, right? It's gonna be very high probability. We have the order block right here, right? This is our order block right here. You could have order block right there. You drag that out. It respects it. Obviously, look at the CE of it, right? No body candle closures below it. And then we start pushing up like crazy, right? Boom, 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 boom. So as you guys can see there, we also have a breaker. Let me go to the 5 minute real quick. Actually, no, we don't. But as you guys can see here, it starts respecting the bullish PD arrays right here, fair value gap tap. We come down, we tap this 5 minute order block right there. That's high probability. And then we're tapping points of control, which is the range low of this, right? And then your TP, right? Your first TP would be the 50% of this, which obviously gets hit here. And then we start, bouncing around. Boom, boom, boom. Let's see where this ends up going. And then, if I drag this range out a lot more, we're in the premium side of this candle's range. As you guys can see here, another sweep, and then boom, right? If order flow is truly bullish, remember, we sweep lows, we reject lows, and we break highs, right? We come back. So this is our range still. We're still using the 4 hour as our range. Just drag this out, and then we sweep the range high right there, okay? There was another example here on the daily that was very, very nice. If you guys look right here, this is actually pretty sick because if I leave this parent candle's high right here drawn, right? Leave that high drawn, and then we go to the daily. This is our range right now, right? Because why? Because we closed a body below everything over here, right? So this becomes our new range right here. So I mark this range out, and then as you guys can see here, we never close a body below the range low right here, right? We come back, we sweep below again, and then we're just kind of just sideways for a bit, right? If I go to the 1 hour here, This is our daily range right here that we're using. We come back, we sweep liquidity, and then we start pushing up. And then look at this, guys. This is very, very nice, right? You just mark out your range. We tap point of control perfectly, tap it again, sweep liquidity. Now we're ready to go up, okay? So right here, this, like, you didn't even have to trade all of this right here. You could have just looked at this right here, this 1 hour candle on this day as your range, right? Because again, you can fractalize it, right? So you could use this as your range because why? Because we're here. Let me turn on this separation of the days, right? This is Thursday's trading day, right? Midnight opening, we go up, and then we come back down and we tap below midnight opening. We go into this fair value gap, this key level, right? Which is right under this candle range is low. And look at this candle right here, this 9 a.m., right? What did it do? It opened lower, no top wick, okay? So you could have just placed the limit order right there, and then you could have took it up to this candle range high. And then if you're looking at the higher time frame draw on liquidity, which was that daily candle's high, right? If I go to the daily candle, you guys will see that daily candle's high, we sweep it, right? And then this becomes our new range. And then this becomes our new range because we close a body above it. And this becomes our new range because we close a body below this one. And then this becomes our new, or our ICR, because we close within this range right here. And this becomes our new range. And look, guys, like I said, if the sweeps are valid, we get a high probability order block, or not order block. Well, order block 2 and breaker block, okay? So we have a breaker block right here on the daily. We use it, we respect it, and now we're drawing up to that weekly candles high, okay? Crazy, crazy stuff with the candle ranges. It's very, very nice. Let me show you guys some examples also on indexes. I'll show you guys a quick one because I think this video is going to be too long, but I don't want to drag it out too much. If I split this open, let me go ahead and show you guys. Actually, Thursday was a perfect example of this. Let me show you guys this, all right? So 1 hour, we're going to use this as our range right here. So this right here on 10 a.m. opened lower, right? It opened lower, and then we sweep the low over here, the 9 a.m. candle, right? So this is our 4 hour candle open. We open lower, we sweep, and we have an SMT divergence there. Okay, so let me go to the 5 minute real quick. So right here, 10 a.m. 10 a.m. opens here. We open lower. We have an SMT. You can get in right here. Okay, this is going to be your low market buy, right? We have an SMT right here with ES and NQ. You can get in buys right there and target the draw liquidity up here, these highs right here, these relative equal highs right there, okay? If not, if you miss this setup here, or if you're too afraid to get into, you know, a rejection block right here, right? If you're too afraid to get in that, sorry guys, somebody texted me. If you're too afraid to get into that position right there, you can always wait for the 11 a.m. candle and see what that does. And as you guys can see here, let me go to the 1 minute. Pretty crazy stuff, guys. So 10 a.m. range, right? We mark our 10 a.m. range. So 11 a.m. should be, if we're bearish, if we want to look for downside, it should be the manipulation candle. And how would I know that? Because we make SMT divergence here with NQ. NQ makes the higher highs, and then ES and YM make higher or lower highs, right? Makes lower highs right here at the highs, okay? So this is where you would want to get into ES or even YM potentially, okay? The reason for that is because specifically in this example, we're at all-time highs, so we don't know how far NQ can go while ES and YM are holding the SMT divergence. So you would want to get in the weaker one in this case, which would be ES. And then, like I said, guys, if the turtle soup is valid, if the sweep on liquidity is valid at the range high, we sometimes, not always, but we sometimes come back to OTE, okay? And look at this, OTE. We retrace all the way back up to OTE, and then we tap what? The breaker block, fair value gap, right? Order block, CISD. We tap all these things, and then we go lower, right? And then 12 a.m. or 12 p.m. opens, we open lower, right? And now you wouldn't want to long this. And the reason why you wouldn't want to long this is because we're in distribution candles. You don't want to long distribution candles. If this is valid, if this turtle soup is valid, and if this range high, the sweep of the range high is valid, you guys do not want to long distribution candles to the downside, which is going to be the range low, right? Target is going to be the range low. Obviously, the 50% is going to be your take profit or your partial spot, right? Which obviously gets hit here on the 12 p.m. open, right? We sweep liquidity there, and then we hit it right there, right? So you don't want to long anything. I mean, you can, but they're going to be very temporary, right? And then 1 p.m. opens here. 1 p.m. actually opens lower, and then we go high, and then what? We make, I believe we made another SMT somewhere around here. We made another SMT at the, we made an SMT at the 12 p.m. high, right? 12 p.m. NQ sweeps it, but ES and YM failed to sweep the 12 p.m. high. And then we go way lower and we attack the range low. And then we obviously just go lower after that, right? You don't want a long distribution candles in this scenario here, right? So yeah, guys, hope you guys enjoyed the CRT video. Rewatch it if you need to. I know it's a lot, but yeah, guys, hope you guys enjoyed this video. I think we're nearing the end of the Academy, but if you guys like this video, please comment, subscribe. Let me know if you guys like the Academy. It's been fucking amazing lately, but I've enjoyed making these videos for you guys. These 3 models, right? The inverse, the unicorn, and the CRT model. These 3 models are the only ones you need really to be profitable in these markets. And when you get a sweep like this is a unicorn up here, right? This is a unicorn right here, breaker block, fair value gap combo on the 1 minute. This becomes your high probability unicorns and breakers because of the sweep on the range, right? Sorry, guys, if you hear my dogs barking, but yeah, hope you guys enjoyed the video. Study these 3 models, and I'll catch you guys in tomorrow's video for Sunday. All right, guys, catch you guys later. Hope you guys enjoyed the Academy. Please comment, like, subscribe, and I'll catch you guys later. Peace.